Right. There's not much time considering the fact that we are starting by 8. But please, can I quickly confirm if you can hear me and that you can see my screen?
Yes, sir.
All right. Thank you. All right, let's jump into it. A quick revision of what we did last week. Last week, we were considering, earlier we had looked at piecemeal acquisitions where there is a reduction in the equity interest of the non-controlling interest. All right. We have also looked at a situation where we now have a reduction. That was what we considered last week. A reduction in the equity interest of the parent. And we said generally we can call this what is called transaction between owners. However, last week we said we could have such a disposal of equity interest by the parent to an amount where the equity interest is so reduced that they would have lost control. Or we could have a situation where control is retained. Where control is retained. And we said, we looked at the various treatments. Now, attention must be paid here. When control is lost, it could be lost to a tune where we have simple investment, simple equity investment. Simple equity investment. We said this is managed under IFRS 9, and the valuation of that investment is so determined by the company based on the business model and the pattern with which they are going to be generating whatever interest or returns from that investment. In this case, equity. So therefore, it could go the way of amortized costs, or it could go the way of fair value through POL or fair value through OCI. However, we could also have a situation where control is lost. However, the company still has what is called significant influence. So this is usually the case where the company has between 25% to about 49% equity interest retained. We said in this case, we're going to be doing equity accounting method under IAS 28. IAS 28, investment in associates. All right, we're going to look at, we started a question last week. We're going to continue from where we stopped. Okay, and this is when there is lost control. But we even solved the last question we solved. We came to a point where there is nothing left. We came to a point where the company totally left the group. There was zero equity left. All right. However, doesn't matter much. You will be guided by the details of the question. But what is generic is this. Whenever you have been told that the company lost control, meaning that you are no longer expected to consolidate, meaning that you are no longer expected to do a full consolidation. And what is the meaning of full consolidation? Full consolidation means you are going to add the assets and liabilities line by line for both the parent and subsidiaries. Now, that is full consolidation. But immediately control is lost, it no longer becomes the responsibility of that parent company to still go ahead. In fact, it's no longer a parent company. It is no longer the responsibility of the company that has sold equity interest to now continue to consolidate. They are not going to consolidate any further than that day. So you must be careful to know when consolidation is required and when consolidation is no longer required. We said it in the last class. Once disposal comes to a point where it has reduced the equity stake below 50%, they are signaling something to you that, oh boy, you will no longer need to consolidate. It's as simple as that. However, if control is retained, then I will need to continue to consolidate. I want you to pay attention to what you have on the board, on the screen rather here. Pay attention to what you have here. In case you forgot what we discussed last week, this is the key point that you must bear in mind. The key point you must bear in mind: when control is lost, you need to consider the fair value of the consideration that was received and the fair value of any retained investment. When you have that total, you will compare that against the net asset that was lost on the day disposal was made. Okay? Now, what do we do then? In this case, it will be the ordinary share, the retained earnings, any other reserve that is post-acquired. And then we'll also consider the goodwill. But be careful, they are goodwills, because when there is the issue of goodwill, you may forget that you needed to calculate goodwill if the examiner did not give you. So I need to go back to the date of acquisition to calculate the goodwill. Now, what I was going to say is this: when you are giving goodwill, when you derive a goodwill, you need to ask yourself a question: is this goodwill jointly owned by the parent and the NCI? Or is this goodwill solely belonging to the parent? And the decider of that is this. The question is simple. When you read about NCI in the question, did the examiner tell you that the NCI is to be measured at the proportionate share of the identifiable net asset of the subsidiary? Or did the examiner say NCI is to be measured at full or fair value? Now, if NCI is to be measured at full or fair value, definitely the goodwill belongs to both NCI and parent. But the goodwill we are mentioning here, you must be careful so that when you want to do your adjustment of what is the NCI you want to less, you will know whether your NCI is going to be strictly NCI that does not include goodwill. It will not include goodwill whenever we are discussing NCI at proportionate share. But it will include goodwill when we are discussing NCI being measured at full or fair value. So you must be able to understand this, very, very important. However, you could also have where control is retained. Now, if control is retained, I am simply comparing the consideration I have received versus the increase in NCI. I'll come again. When control is retained, I am simply comparing the consideration I have received versus the increase in NCI. Okay, so let's go back to the question we're solving last week, and let us look at how we can solve B, C, and D. That's going to be the focus in this class. We're solving problem 3. We had earlier solved the A part. Today, we are going to go on and solve the B, the C, and the D. Please give me a moment, just a moment. All right, guys, I'm sorry. I just wanted to ease myself. All right, okay, now let's move on. I'm going to go back to the question. I hope we're all still together. All right, Rexco acquired 80% of the share capital of Maxco for 162,000 naira on 1st January 2015. At that date, Maxco's retained earning balance stood at 90,000. The statement of financial position at 30th September 2017, that date are given below. All right. You have the numbers there. I'm just going to skip to the additional information. We are told it is the group's policy to value NCI at its proportionate share of the fair value of the subsidiaries' subsidiaries' identifiable net assets. You're told to ignore taxation. When they say ignore taxation here, recall that we had earlier mentioned that the gain on disposal is a taxable income. So when they said ignore taxation, they are saying don't bother about the tax on gain on disposal. That's exactly what they're referring to. Because if you look at the question, you will see income tax expense. That's not the one they say you should ignore. I hope that is clear. All right. What is the requirement? You are required to prepare the consolidated statement of financial position and statement of profit or loss at 30th September 2017 in each of the following circumstances. A, we are told Rexco sells its entire holdings in Masco for 325,000 naira on 30th September 2017. And this was what we solved last week. This was the question we solved last week. I don't think there is need for me to go back there. I want to believe we all understood. Okay, we go on to B. In the case of B, we are told that Rexco sells 25% of its holdings in Masco for 80,000 naira on 30th June 2017. C, we are told Rexco sells 50% of its holding in Masco for 170,000 naira on 30th June 2017, and the remaining holdings has a fair value of 125,000 naira, and it should be treated as an associate. I think I mentioned last week, the question may tell you or may not tell you whether you should treat as associate. If it falls within the associate perimeter between 25% to 49% or less than 50%, what you do is you treat it as an associate. But if the question I said don't treat as an associate, then you don't treat as an associate. We are going to see what it means to treat it as an associate in this class by the special grace of God. D says Rexco sells 50% of its holdings in Masco for the same amount, 170,000 naira, on the same date, 30th June 2017, and the remaining holding has the same fair value of 125,000 naira. However, it should be treated as investment in equity instruments. So this will just be taken as an accretion of wealth, nothing else. Simple equity investment. All right. So we're going to do B, we're going to do C, and we're going to do E. If you look at, and C, D, E. If you look at E very well and A, they are the same thing. So we're just going to ignore that and pay attention to B. So let's get started. So what is the first thing that you notice here? The first thing you should notice is that the first thing we should notice is that 80%, let's start from the date of acquisition. On the date of acquisition, Resco, what is wrong with my annotation? Can we see my screen now? I don't know, something was happening with my screen. Now, on the date of acquisition, Resco bought 80% in Masco. Okay? Now, at that date, 1st January is a 2015, the retained earnings of Masco was 90,000. According to the question, they said 90,000. All right. Now, how much did Resco pay for the shares in Masco? How much? If you look at your statement of financial position for Resco, investment in Masco is how much? 162,000 naira. All right. So they paid 162,000 naira to acquire those shares. Now, what we must do is this. We want to calculate what is the group, from the group perspective, what is the gain or loss on disposal. But before we even go there, the question should be this. This happened on this date. Then the question now told us that on 30th June, 25% of this 80% was sold. Meaning, what is left as of 30th June 2017 is 55% equity interest. 55% equity interest. Now, with 55%, we are still very much, okay, not very much, but we are still above the 50% mark. Now, what that means is that we are going to continue to have controlling interest. Resco continues to have controlling interest in Masco. Then the implication of that is that I am going to consolidate the assets and liabilities of Masco. Not only that, I am also going to consolidate the profits of Masco. It will be shared between Resco and NCI. The only thing I must pay attention to is this. What is the share of Masco profit that will go to Resco? Okay? You see, from 1st October 2016 to 30th June 2017, this will be 9 months. For these 9 months, Masco will get 80%. Are you getting my point? But from the day that NCI increased, which is 30th June 2017, NCI increased by 25%, meaning the parents disposed 25%. For the remaining 3 months, RESCO would only get 55% of the profit of MASCO. So I must pay attention to this. Also, when I'm dealing with the retained earnings,
All
when
right,
I'm
Mr.
dealing with,
Fiam,
all right,
sorry, can you come again with your explanation on the date?
okay, go, okay, good. Let me come again. Remember that the year end of this company, if you look at statement of financial position, they said the statement of financial position as at 30th September 2017 is what they have given us, meaning that the financial year end of this company is always 30th September. So I want to ask a simple question. If we have a SOFP of 30th September 2017, when did the financial year started? When did it start?
August. It started August. August
August.
2016.
We can do a count from August. If we count from August to September, I'm sure we'll count like 13 months, if not 14. It should have started, if their year end is 30th September, then the beginning of a new period should be 1st October. Do you understand now?
Yes,
so that is
yes.
why I said the year would have started from, this accounting year would have started from 1st October 2016. All right? And that accounting year will run from that 1st October 2016 down to 30th September 2017. That is how you count the full year. October 1, November 2, December 3. That's 3 months, Abi. And then the 9 months down to September. 9 plus 3 gives us 12. So if the disposal was done 30th June 2017, what it means is that we continue to have 80% holding until that day. Abi? So the share of the profits that RESCO will have will be 80% from 1st October 2016 down to 30th June 2017 for that year. Then the remaining 3 months will no longer be 80%. They have sold off 25%. It will now be 55% of the profit for the year. Does that make sense now? Does it make sense now?
Yes, yes, it's clear.
Very good. You're welcome. So let's move on. I have not solved. I'm just establishing the things that we must pay attention to. It's a lot simpler than maybe I'm making it look right now. Let's get into it. Okay, first thing first. I want to calculate the gain on disposal, but don't forget, I want to calculate the gain on disposal, but I said you should not forget the point to which they continue to be 80% and the point they started to be 55%. So how do I go about it? It's simple. Gain on disposal. Okay, I think I don't want to assume that we are going to remember what we did last week. The first thing we did last week was to first of all calculate the goodwill on consolidation. So now don't let me assume we still remember. I will do as if we do not remember. I will say, let's go back to the date of acquisition. On the date of acquisition, consideration we paid was 162,000. NCI is measured at proportionate share. So therefore, I need to first of all calculate the net assets acquired. Let's not waste time here. Ordinary share capital of Masco on the date of acquisition. They didn't give me any other information, so I'm just going to come here. It's 90,000 here, all right? The retained earnings on the date of acquisition, I was told is 90,000. So 90,000 here, meaning that the net asset acquired was 180,000, all right? My NCI, as at that day, we bought 80%. Therefore, NCI is only 20%. So if I do 20% of the 180,000 naira, 18 times 2 is 36. I think that's 36,000 naira. What I have here is 198,000. If I do 198,000 minus 180,000, I'll come back to the 18,000 we had last week. Goodwill on consolidation. All right? Why did I need to come back to this? Because we are consolidating, and I am still going to come back to this goodwill. So that when I now put goodwill in my solution, somebody will not say, but where did you get that goodwill from? So this is what we needed to do to get our goodwill. I want to believe this is clear. Is it clear? My students, is this clear? This is easy. Thank you. All right, let's move on. Okay, so now we come to gain. Let me do my gain by the other side, by the left side. Now for gain on disposal. Gain on disposal. Sorry. Let me move this one to this. Okay, good. Now, consideration that we receive. We said whenever control is retained, I am going to compare.
Sir, please, we can't hear you.
How about now?
Yes.
Okay, good. We said whenever control is retained, the first thing to ask yourself, is control retained? If the answer is yes, good. How do I go about calculating gain on disposal, gain or loss on disposal? When control is retained, I will simply compare what is the consideration I received versus what is the increase in NCI. Similar to what we did when we were doing piecemeal acquisition. When we're doing piecemeal acquisition, we would have compared. Can you hear me?
Yes, sir. Please excuse, I was thrown out. This retained earning of this 90,000, please, how did you get the retained earning?
Okay, if you look at the question, you see I drew a line there. Can you see it? 90,000.
Okay, yes, thank you. Okay, thank you, yes.
You're welcome. All right. Now, for us to calculate gain on disposal when control is retained, I'm repeating it again. We simply say the consideration that was received versus the increase in NCI. So let's go on. Consideration received. How much were we paid? According to the question, we were told that we received 80,000 naira. Isn't it? We were told we received 80,000 naira. I hope you all have the question with us. Okay, let's go down. Let's go down. I recall 80,000, but let me see whether I'm wrong. Okay, B says Rexco sells 25% of his holding for 80. Okay, so we received 80,000 naira. All right, we received 80,000, and that is clear now. 80,000, that's what we received. I said compare this to increase in NCI. Okay, compare it to increase in NCI. Compare it to increase in NCI. Okay, now, how do I know my increase in NCI? The question told me that NCI is measured. I will keep going back there again because it will determine what you are going to do next. The question told me NCI is measured as proportionate share. So therefore, when I want to calculate increase in NCI, I must still pay attention to what the questioner told me. My increase in NCI will still be calculated based on the net assets. All right? Now, what is the net? Don't forget again that the net assets that we want to calculate now is not net asset at acquisition date. It is net assets as at the day of disposal. And what is the day of disposal? The day of disposal is 30th June 2017. Okay? I'll tell you why I'm saying that. Ordinary share has remained 90,000. Okay? But look at retained earnings.
So we can't hear you again.
How about now?
Yes.
Yeah, I think I know why you are. I think it's each time I move close to my screen that you lose me. All right. Now, retained earnings as at 30th June should be how much? They didn't give me as at 30th June. What they have given me is two things. They gave me as at the day of acquisition, it was 90,000. Then they now gave me again as at the day of consolidation, 30th September 2017. They told me that retained earning is how much? 180,000 naira. Can we all see it? They told me as at that day, 30th September 2017, retained earning is 180,000 naira. Okay? So, but that's not what I need. What I need now is retained earnings as at 30th June. So if I count the difference between 30th June and 30th September, how many months do I have? I have July, August, and September, making 3 months. Meaning that what I'm going to do is this. I need to strip off the profit for 3 months. Is this clear? I need to strip off the profit for how many months? For 3 months. Now, when they gave me the extract of statement of profit or loss, they told me as at 30th September 2017, we have 45,000 naira there. That 45,000 naira, as we all know, is the profit for the year. For which year? From 1st October 2016 down to 30th September 2017. It covers for 12 months, all right? And I want to strip out only 3 months from it. So it means my retained earnings will be this 180 that was accrued until 30th September. I will now take out that of 3 months, 3/12, from the profit for the year, 45. Is this clear, everybody? Is this clear, everybody? If it's not clear, please let me know.
Please, you can take it again, sir.
All right. So let's do it like this. Okay, I think a timeline was drawn in the solution. All right. Let me just go there. The timeline was drawn. Let me use that timeline so that it will be neat. You'll see what I'm saying clearly. All right. Now look at the screen. They're trying to show us something here. The profit for the year. Okay, this is not for this one. Let me find it. Okay, good. You see, the profit for the year would have run from 1st October 2016 down till 30th September 2017. But you want to look at the retained earnings as at the date of disposal. The date of disposal is 30th June 2017. So my question will now be that, okay, that means the retained earnings should be from the day of inception of Maxco and down to 30th June 2017. So how do I get that figure? A simple way to get that figure out would be to remove from 30th June 2017 to remove from 30th June 2017, whatever they have there. Sorry. Whatever they have here, till they got to 30th September 2017, will not be part of the retained earnings as at 30th June 2017. Because those profits were made after we had already disposed. So is it clear now?
Yes.
Good. So we say this 3/12 times 45 is the portion of the profit for the year that came after we disposed. So it should not be part of the retained earnings as at the day of disposal. Now if you do that, 3/12 times 45,000 gives me 11,250. If I say take 180,000 away, I will have 168,750. If you did that with your calculator, you get the same thing. So I'll say I'm going to add 168,750. All right. If I add these two numbers together, what do I get? What do I get? 90,000 plus 168,750. 90,000 I got 258,750. 258,750. All right. Are we in this class? Now, NCI has increased by 25%. So 25% of this number, 25% of 258, 750 is 64,687 naira 50 kobo. 64,687 naira 50 kobo. So what is our gain? I will say the consideration we received.
Sorry, please, how
Why?
did you get 168,000? I'm
Okay.
trying to follow your calculation. I'm not 168.
Okay.
This written any. I got
Yeah,
I got removing the 3 months. That's 11,250. But how did you
okay.
have this 168,750?
Okay,
Sorry.
you are forgetting that the 3 months you calculated 11,250. That is the portion that should not be in the retained earnings as at the date of disposal. So what is our retained earnings in the SOFP? 180,000. And now we remove the 11,250. That's how we got 168,750.
Okay.
Is it clear now?
Yeah, it's there.
All right. So the increase in NCI, this is the net asset. I mean, this is the net asset of Maxco as at the date of disposal. So increase in the value of NCI. The increase in the value of NCI is 25%. So you simply calculate 25% of 258,000 and you get 64,687 naira 50 kobo. Now, do 80,000 what we received minus the increase in NCI. What do you get? I got 15,312 naira 50 kobo. 16,312 naira 50 kobo. That's what I got. And I'm sure that's what you should get as well. 16,312 naira 50 kobo. Is this clear?
No, sir. Please, can you just go back like 3 steps before now? I
Okay.
lost it.
You know what I will do? I'll stop sharing this. I'll just go to the whiteboard so that you can see clearly what I'm doing. I think that might be the problem. I want to believe I don't need to go back to goodwill on consolidation. That one is easy. We have always been doing that one, right?
Yes.
Okay, good. I don't need to go back to that. All right. This is what I said. When they say the dividends, it means all the profits we have been making since. So as at 30th, our retained earnings, according to the statement of financial position, is 180,000. All right. So the question is, what is the retained earnings as at 30th June 2017? Now, we now said that the difference between 30th June 2017, 2017 and 30th September 2017 is 3 months. All right. So we said for that year, profit for the year in the question, we were told is 45,000 naira. All right. Now, this 45,000 naira was from 1st October 2016 to 30th September 2017. So therefore, I need to take out this 45,000 naira. Don't forget that is inside this 180,000 naira. I'm sure we know that. All right. That when they say retained earnings as at 30th September 2017, it already includes the profit for the year. How many of us are we aware of that? That is basic. We should all know that it includes that. Is this clear? That this 45,000 naira is inside this 180?
Yes, sir.
Okay, so the only portion that I need out of this 180,000 out of this 45,000 naira that should remain inside this 180,000 is for 9 months. The remaining 3 months between 30th June to 30th September should not be part of it because those profits came after disposal. So therefore, I will need to say post-disposal profit, if there's anything like that, will equals 3/12 times 45,000, which is equals to how much? 11,250. Therefore, my retained earnings on disposal dates or date of disposal on disposal dates on disposal dates will equals 180,000 minus 11,250, which is what gave us, is it 186,000, 168,750. Is it clear now?
Yes, sir.
Good. So I can move on. So when we want to calculate gain on disposal, I said for you to do gain on disposal, just compare the consideration you have received versus the increase in NCI. The consideration received was 80,000 naira. Increase in NCI. We said ordinary share capital was 90,000 naira. The retained earnings as at the date of disposal is 168,750, meaning the net assets of Maxco is 258,750. Now, increase in NCI. NCI increased by 25%. Why? Because Resco sold 25% to NCI. Transaction between owners. So they sold 25%. The increase in NCI, therefore, is 25% of 258,750. And that will amount to what we calculated, let me see my calculator, 64,687 naira 50 kobo. I'm sure if you do your calculator, you see the same thing. 687,87 naira 50 kobo. And when you minus that, you get 15,312 naira 50 kobo. Is this clear now?
Yes, sir.
Good. Okay. So if this is my gain on disposal, I have done like, let me say like 40. If I get this one correctly, which is very easy to get, I have done like 40% of the hard work. Let's calculate the consolidated retained earnings. Don't forget that we are consolidating. So we should calculate consolidated retained earnings. Just pay attention so that you don't miss anything here. Okay? We are consolidating fully. Oh God, it's my screen at times. I'll just manage the other side of the giving me issue. Okay, This is Resco. This is Max. Okay. Now, as per our SPL on 30th 09 2017, we're told that Resco had 207,000 naira as retained earnings, isn't it? And then we're told Masco had 180,000 naira. I believe you still have access to the question.
Yes, sir.
Okay, so let me continue then. Now, the pre-acquisition retained earnings. Oh, something is frustrating me on my screen. Oh, this thing is really frustrating me. Let's just move on. Okay, now, pre-acquisition retained earnings. Don't forget that Masco had some pre-acquisition retained earnings, so Resco cannot show that. All right. Now, pre-acquisition, we're told is 90,000. I believe you can still see this in your question. Now, let's not forget that there is a gain on disposal that we have just calculated. What is our gain on disposal? 15,312. Good. Now, let's start share of profit. Share of profit. Don't forget what I told you. When you want to share profit, you must be careful. Up until 30th June 2017, Resco still had 80% control. Then thereafter, for the remaining 3 months, to 30th September 2017, it now had only 55%. Okay, so this is what we're going to do. We'll say 55% of 55% of 90,000 minus 3/12 times 55.
Sir, we can't hear you again.
Hey, Jesus. How about now?
Yes.
You can hear me now. It's immediately I get close. Immediately I go close to my screen. That's when you don't hear me. I'm coming. All right, good. So, do we understand what I did here? I have simply said, out of the post-acquisition profit, Resco will not get 55% for 3 months. And remember, we calculated those 3 months, 11,250. You remember? So if I like, I can even take out this 3/12 and all of these dances and just say 90,000 minus 11,000. Because that is what 3/12 times 3/12 times 45,000. That's what you give me. So let me just write it out. So 55% of this is what Resco will get. What am I doing? Sorry. 80% rather. Sorry, please. They were getting 80% until the day they disposed. Abi? So what I've done is to take out the profit after they disposed from their post-acquisition profit. Is this clear? Is this clear, or do I need to go back and explain again?
Please go back, sir. It's okay.
All right. Let me put it like this. You know, when we were doing the retained earnings as of the day of disposal, we said 3 months profit. All right. Those 3 months profits out of the 45,000, that is the profit for the year, came after the date of disposal. They disposed 30th June 2017. So the profits for July, August, and September came after they disposed 25% of their holdings. So when I want to calculate Resco's share of the post-acquisition profit of Masco, I must be careful that they add 80% until 30th June. All right. And then for the remaining 3 months, they had only 55% equity interest. So when I want to calculate, I will split my calculation into two. The element that is 80% of the retained post-acquisition retained earnings, and the element that is 55%. I must break it down into two that way. If not, I will not be correct with whatever value I come up with. Is it clear now?
Yes, sir.
So in terms of numbers, the post-acquisition retained earnings is 90,000. Good. Take out the 3 months and do 80%. That's what I'm doing now. Is it clear now? So if we do that, you will discover that 90,000 minus 11,250 is 78,750 by my calculator. If we do 80% of that, we get 63,000 naira. All right. And then we now do 55% of the remaining 3 months, 11,250. If I do 55% of 11,250, my calculator tells me I have 6,187 naira 50. Okay. And if I add all of this together, what do I get? This value plus 63,000 plus 15,312.50 plus 207,000 naira. I get 291 naira, 291,500. Is this clear now? This is my consolidated retained earnings. Is it clear? I'm not hearing our response. Is it clear?
Sir, I don't understand why the 55% is on 11,250.
Okay, what do you think we should have done? Do you think we should have done 90,000?
No, since the share of profits is not supposed to be 55 on the 45% on the 45,000 of the profits. I don't understand that part. I just don't understand.
Okay, so that 45,000 is for the whole year. All right. You must understand that 45,000 is part of this 90,000. All right.
Okay.
So this 90,000 includes profit for the year 2017, profit for the year 2016. All right. I think the question said they acquired the company 1st January 2015. Okay. So therefore, it also includes 2015. Are we together? Now, part of the profit in 2017, what happened in 2017? In 2017, Resco sold 25% of our shares. Now, in this year, Resco would have taken 80%. in this year, they would have taken 80%. If Resco did not sell, we would have still said they would take 80% of the profit in 2017. What 90,000 is representing is the summation of all the profit. So Resco would have shared 80% of all this 90,000. All right? But Resco cannot share all of the 90,000 because in 2017, sometime in between the year, they sold part of their equity. They were now left with 55%. So I need to calculate 80% from the date of acquisition down to the day that they disposed 25% in 2017. What is that date? The date they disposed is 30th June. So between 30th June and the year end in 2017, there are 3 months. I said, take out those profits for those 3 months from this 90,000 and do 80% of that. Good. So what is left after I have taken the 3 months away is remaining the 3 months. So that profit for that 3 months, what is Resco's share in that profit? Resco now has 55%. So they will only share 55% of the profit for 3 months, not the profit for the whole of 2017, which is 45,000. Inside this 45,000, they will share for 9 months. Don't worry, when we get to SOPL, maybe you will get it better. The remaining 3 months, they won't get 80%. They will only get 55%. So what we dealt with here, we have dealt with that 9 months and the profit for 2015 and 2016. So it is only the 3 months in 2017 that we are dealing with here now. Is it clear?
Yes, sir. Thank you, sir.
So let's quickly do NCI. My NCI will be simple. At the date of acquisition, my NCI at the date of acquisition, we said NCI was 20% of 180,000, if you remember. And that gave us 36,000 naira. Do you recall this? Do we recall this?
Yes, sir.
Okay, good. So for NCI as well, they will get 20% until the date of disposal. That will be 90,000 minus 11,250. All right? Meaning that they will get 20% of 78,750. How did I get 78,750? 90,000 minus 11,250 will give you 78,750. Now do 20% of that. That was what they were getting until the date of disposal. You have 15,750. All right? And then for the last 3 months, they are going to get 45% of 11,250. The remaining 45% of 11,250. And that gives us 5,062 naira 50 kobo. So I'll come here, 5,062 naira 50 kobo. And everything will amount to this value plus 15,750 plus 36,000 gives me 58,000 Is it 58 or 56? 56,812 naira 50 kobo. 56,812 naira 50 kobo. Now, let me quickly do the SOFE, the Consolidated Statement of Financial Position. SOFE, Consolidated SOFE. Oh, you know what? This NCI, let me bring it here so that we can see what we have done very well. All right. NCI. I left out something. Okay. As at the date of acquisition, NCI was what? 36,000. Abi? They are going to get this 90,000 until the date of disposal. They will get 20% of 90,000 minus 11,250. All right. As of that day, they increased their value, increase in NCI. Now, increase in NCI that we calculated the other time, we said increase in NCI was, if I remember, 25% of 258,750. That was how we got 64,687 naira 50 kobo. Okay. Now, if we do 20% of this year, we already did it. We got 15,750. I said you take the remaining 45% from here. 45% of 11,250. We got 6,000. 6,000. What did we get again? See, let me see. 6,000. Sorry, 5,000. 5,062 naira 50 kobo. If we add all of this together, 5,062 naira 50 kobo plus 64,687 naira 50 kobo plus 15,750 plus 36,000. We get 121,500. Is this clear? Is this clear?
45,000, is it from the offset of the 55,000? That's the 45%. Is it the remaining of the
Yeah.
55%?
Yes. The remaining profit for those 3 months. You know that NCI is now 45,000. I mean 45%.
Okay.
Any other question? Let me make sure I'm carrying my students along. I've not heard from some people. Chidima Odumodu, do you understand?
No, sir, I don't understand.
Hey, Jesus. Priscilla, do you understand? Priscilla, do you understand? Praise. Our number has really reduced. What was happening? Praise, do you understand?
Recording later.
What's the recording later? Hey, Jesus.
Yes, I joined late. That's
Okay. Okay. Olumide, Olurin, do you understand?
Yes, I do.
Echo. Esan Echo, do you understand?
Yes.
My friend Tintin, do you understand?
Yes, sir.
I think I'll move forward. If
Let me ask a question.
go ahead, sir.
Okay. Is it that when computing for this, or do we have two net asset lists as far as this question is concerned? Do we have to calculate for two net asset lists?
Net assets what?
Net asset list.
I don't get you. Net asset list. Do you mean LEASED?
When we are consolidating now, after group structure, we always have net asset list. Is it not so? Or net asset of the subsidiary. Okay. In this question, you did about two. So I want to know, in every question, must it be two?
Okay. Thank you. Very good question. I think I understand you perfectly well now. So this is how I'll answer your question. I want to ask you a question, Mr. Christian, Abi. Mr. Christian.
Ekpo.
Okay, Ekpo, okay. Now, good. You know, the question is this: what really grows the net asset? The net asset of a company will most likely ordinarily grow by the profits the company is generating. So when you are looking at the books of Masco on the date of acquisition, they told you that retained earnings is 90,000. All right, that was 1st January 2015. Why is that information necessary? That information was necessary because I needed to calculate the goodwill on consolidation after the day that Masco was acquired. Is that part clear?
Yes.
Now, when we come down to the date of disposal of Resco shares, I want to know the increase in the value of the NCI. How will I calculate it? I'll calculate it by saying, by what percentage did NCI increase? Multiply by the net asset of Masco, the subsidiary. But what is the date of disposal? The date of disposal now is 30th June 2017. Masco would have made some profit or losses. So you cannot expect the net assets of Masco to remain the same as at the day of disposal. You want it to remain the same with the date of acquisition. It's not going to happen except Masco has made no profit or losses. They have been at zero. Are you getting what I'm saying now? So what is driving the increase in the net asset of Masco is really the increase in the profit. So the retained earnings has grown from 90,000, it has grown to a new amount. As at 30th September, it had grown to 180,000. So all of the dates juxtaposition that we have been mentioning is because the question was tactical enough to give us retained earnings as at 2015 and retained earnings as at 30th September 2017. But the date of disposal was during a financial year. It was not at the end of the financial year. It was not at the beginning of the financial year. It was in between. So you must be like a surgeon. You must cut away the profit they made after that day of acquisition in your analysis. You must cut it away. You say 80% holdings until this particular day. I will take from this profit 80% until this day. Then after the day, what is their new holdings? Then I'll calculate their new holdings against the profit they made afterwards. So it's not that net asset remains the same. It will never remain the same. Net asset of a real life company will continue to change over time, If they have not even done anything, they must be making profit or losses. If there are no fair value adjustments, there must be profit or losses. And as they are making profit or losses, it's going to be changing their retained earnings, and thereafter it will be changing their net assets. Do you get? So the question you must ask yourself when you say net asset is net asset. Is it as of the date of acquisition? Is it as of the date of disposal? Is it as of the date of consolidation? If you pay attention to that understanding, if you pay attention to what the examiner is telling you there, then you are 99% correct. You will not miss it. When I'm doing net asset as at the day of acquisition, I should know that it is the pre-acquisition retained earnings that will come in. When I'm doing increase in NCI and I want to make reference to the proportionate share of the net asset of the subsidiary as at the date of disposal, I must be technical and calm enough to do my best to figure out now what is their retained earnings. Do you get my point now?
Yes. At least I know it's from you calculate for acquisition and disposal.
It's clear now. So that's how it is. Is there any other question before we move further? Because we've done the question. All I just need to do is to consolidate now, and then we'll move on. One question, we have spent over 1 hour. Wow. And there are 2 more to do. Are we good? Can I move on? All right. I will assume your silence means I should move on. But unfortunately, Chidima Odumodu, were you in the last class, Chidima?
Yes.
Did you understand what we did in the last class?
Yes, I did.
Okay, because I want to know, why I'm asking, I wanted to know whether it's a problem from inception since the time we moved on to this disposal, or it is just a problem with the question we are solving. I understand it's a bit technical because the question is telling you a disposal was done during the financial year. It was not done at the end. It was not done at the beginning. If it was done at the end or at the beginning, it is not as technical as this because you will not have to be dividing the profits that was made during the year versus the profits that was made after disposal had been done during the year. So I feel like that's just the bit that is still confusing you. However, If after this class is uploaded on YouTube, you go back to it, or you go back to the text and you still do not understand, please, I beg you many times, do not hesitate to chat me up. Okay? Do not hesitate to chat me up. It may not mean that we'll now do private class or anything, but I want to believe that maybe one-on-one, the guidance I will give you will help you. I want to, as much as possible, help every one of us to understand what we are doing so that we can have good success. All right, that is very important to me. So please don't hesitate at all. Don't be shy. Don't be anything. Just let me know. This is what we did in class. I've gone to watch again. I've gone to look at the text again, and I still do not get it. And I'll come through for you. Don't worry. All right, let's move on. Let's do the consolidation. Okay. I normally like to do the consolidation on the face of the question so that I can be remembering. I can easily pick the numbers because I don't have the numbers here. So I'll stop sharing my whiteboard. I'll go back to the question now. All right. Okay. I'll just have my numbers. All right. Oh, sorry. All right. Okay. We are consolidating, Abi. Don't forget that we still retain controlling interest. So therefore, we'll be consolidating. All right. To consolidate, my PPE, I'm adding these two numbers, Abi. 180 plus 135. 180 plus 135 equals how much? Please, let's do it together. Equals how much?
315.
315,000. Okay. Now, investment in Masco, you would have canceled this one out. Basic principle of consolidation. You cancel it out. Did you have goodwill? Yes, we did. Our goodwill was 18,000 naira. Abi? And then we go on to current assets. Now, don't forget that Resco rather received a consideration of how much? Of 80,000 naira. Abi, the question told us they received 80,000 naira. So I will add 80,000 to the 185 for Resco, and I will add the 185 for Masco. So what do we have if you do 185 plus 80 plus another 185? What do we have? 370 plus 80, 450. Altogether, we have 783. All right. Now, ordinary share capital for Masco, for Resco rather, we will not ever take that of Masco. In basic rule of consolidation again, 270. Then their retained earnings. The group retained earnings we calculated the other time. We had 291.50. All right. So I have 561 naira 50 kobo. NCI. We calculated NCI and we got 121 naira 50 kobo. What do you get? 003 683. Abi? Now the current liabilities, I'm going to add them. 50 plus 50 gives me 100. And that's how we get 783. So my total assets and the equities plus liabilities will give me 783. Is this clear? So can we move on to the next problem now? Okay, no. We also asked to do P or L. We are asked to do P or L. The P or L is easy. I am consolidating, all right? I am still consolidating. The only thing is that I am going to make a juxtaposition between 55 and 80%. Abi? But it's even easier because all I have to do for SO, the consolidated SOPL, is to say my PBT and the PBT together, all of it, 76 plus 63,000. That's 76,500 plus 63,000. You get 139,500. 139,500. Income tax, if I add these two together, 18 plus 22,500. Down should be 40,500. The consolidated profit for the year should be 99,000. All right. Yeah, 99,000. Now, you know how you normally share this one. SOPL is easy because all I need to do, owners of parents, and then NCI. I only need to calculate for NCI what NCI gets, and whatever is left belongs to the owners of the parents. So NCI will get 20% of 45 naira profit for the year of the subsidiary. This is the subsidiary. NCI has 20% for 9 months. But they later increased to 45%. Times 45 times the remaining 3 months. 3/12. So if we calculate 45% of 45,000, 20,250 times 3/12. You get that 5,062. 62 naira 50 kobo. Then, if we do 20% of 45,000 multiplied by 9/12, we get 6,750. If we add the two together, is somebody working with me here at all? This should be 11,812 naira 50 kobo. 11,000.
Sorry, is it profit and loss you are doing?
Yes.
So I want to do it on a another sheet.
Okay. Like
Sorry.
that white sheet, I mean.
I think it's more better. Like will be able to understand better. I'll be able to understand better than this.
Okay, no Allah. We're told 76,000 for Resco. And how much for
76,500.
Masco? Okay, 76,500. Thank you. And for Resco, it was 63,000. I said, since we are consolidating, I'll consolidate these profits. And that should give me 139,500. We're also giving tax, 22,500. And the other one, Masco had 18,000. This will give me 40,500. Take that away, and you're left with 99,000. Now, all of this 99,000, we are going to share of profits attributable to owners of parents, and then we have NCI. And I said, NCI, the parent had 80% holding until 30th June, Abi? Meaning that NCI for those period too was only 20%. So I would say for 9 months, you will take 20% for 9 months. 9 over 12 times 45. What are they sharing the SOP? Don't ever forget. What they are sharing is the profit for the year of the subsidiary. So profit for the year of the subsidiary is 45,000. Now, for 9 months, NCI was only 20%. Is this clear? And for the remaining 3 months, NCI was 45% for the remaining 3 months. So they will get 45% of 3 over 12 times 45,000. So in this period, what NCI will get will be, for the first part, I think I calculated 6,750. For the other one, I calculated 5,662 naira 50 kobo. And I said these together should give us 812,050 kobo. What I'm sharing is 99,000. So what owners of parents will get is 99,000 minus 11,812 naira 50 kobo. And that should give me how much? 99 minus 11.8125. That gives me 87,187 naira 50 kobo. All right. So that's how we are going to split it. Is it clear now? Is it clear now?
Yes. Thank you.
All right, good. All right. Let's go to the next question. This one has really stretched us. I think this is the longest we have spent answering a question. And I can understand that maybe because of the adjustments, the fact that disposal was in between the year. Anyway, the next question we want to solve, disposal is still in between the year. Let us look at C. I think from what I've seen, disposal is still in between the year. Okay. I believe we all have access to the question. Let's just look at other device for the question. I'll just go full-fledged, use the whiteboard all through. Maybe that way I can make the annotations clear. Resco sells 50% of its holding in Moscow for 170,000 on 30th June 2017. And the remaining holdings has a fair value of 125,000 naira. And it should be treated as an associate. You see, this is the last question I will solve. The D part, you will take it as assignment. So in the next class, you will tell me what you got and you will defend your answer. Is that okay by us? Is
Yes,
that
sir.
okay by us? Okay, good. All right, let's move on to C. Now, in this case, Resco has sold 50% of its holding. Resco used to have 80%. Now that they have sold 50%, they will be left with only 30%. 30% is lower than the 50% that we said confirms that you are a parent. Therefore, Resco is no longer a parent. As a matter of fact, the question even told us that we should treat Resco's investment as an investment, as an associate investment, rather. So, let us go into the question in terms of solution. What are the key points that I want you to note? Key points I want you to note. Number one, control is lost. All right? What is the implication of that? When control is lost, what do? I am going to compare two things. I said you will compare the fair value of the consideration you have received for the equity you sold, plus the fair value of the equity you have retained. All right? Now, that is the full estimation of what you used to have. You are going to compare that against the net assets of the equity you have lost. The net assets of the equity you have lost. Meaning I'm going to compare it against the carrying amount of the percentage of equity I used to have. That is, all of the net assets of the subsidiary plus the goodwill minus the NCI. Let's go. Let's do it. Right? So I said, note, control is lost. Number two, that you must also pay attention to is that from 30th June 2017, Roscoe is now an associate investor. Okay? From that date. What is the meaning of this? It means that from 30th June to 30th September, for 3 months, they are only going to get share of associate profit. That is all they are going to get. So therefore, it means that you will not consolidate for the remaining 3 months, but you will consolidate their profit, SOPL. You will consolidate for 9 months. Statement of financial position, I will not consolidate at all because control is lost. But don't forget that profit is accrued for a period of 12 months. But for those 9 months that were still part of the group, we'll consolidate those profits. For the remaining 3 months, we will not consolidate. So let's go on. We'll start by calculating. We'll start by calculating the gain or loss of disposal. I said gain or loss of disposal. I said compare fair value of consideration received. How much consideration did we receive? The question told us we received 170,000 naira. All right. Now, fair value of equity retained or retained investment. The question told us that the fair value of equity retained is 125,000. If you are looking for where 125,000 is written, just go to the requirement. You will see it there. 125,000 is there. Now this should amount to 295,000. Okay. Now let's calculate the net asset loss or ordinary share. Everything. Was
Sorry,
how much?
can't hear you. 90,000.
Thank you. 90,000. Now, retained earnings. You can go to the former question. It's the same thing. The retained earnings that we are looking for is as at the same day of disposal. All right. If you recall, it was 168,750. Is anybody lost as to where I picked this number from? This was from our initial solution. And if you are lost on how we got it, it's simple. Just 180,000 minus 11,250. We said 11,250 is 3/12 times 45,000. The remaining 3 months for which came the profits that came after the date of disposal. Abi, is this one clear before I move further? Because I know that this is an aspect some people may want to come back to ask questions. Is this clear?
Yes, sir.
Good. Something you must not forget whenever you are dealing with a situation where control is lost, you must never forget your goodwill because you are no longer consolidating. Abi? So the goodwill on consolidation will also be part of the net assets that you have lost. All right? So that goodwill will come in here. All right? Before I do good, okay, let me go ahead. Let me present it another way so that when I do what I want to do next, you will understand. So the net assets, if I add retained earnings and ordinary share, is the same 258,750. However, there is a goodwill on consolidation. We have lost that as well because when we are selling control, if I don't have control, I can't say I have goodwill on consolidation. So this has to go as well. All right? But don't forget that when we say minus NCI, NCI is measured as the proportionate share of the net asset of the subsidiary. The goodwill does not belong to the subsidiary. The goodwill belongs to only the parent. I said that earlier. Whenever NCI is measured as proportionate share, only the parent owns the goodwill. So therefore, when I want to calculate the NCI as of this date, it is only going to be 20% of 258,750. I will not include the 18,000. Is this clear before I go forward? Is this clear? My students, is this clear? You're not answering me. My students are not answering me. Yeah. Does it mean you guys expected me to add that 18,000? No. That goodwill belongs to Rexco alone. So when I want to calculate the value of NCI, I am not expected to add it. I am only going to take the same net assets we had in the previous question, 258,750. I'm asking now, is it clear? Nobody's answering me. Abidemi Akonde, is this clear?
It's clear, sir.
Oh, good, good. Mr. Esang Epo, is this clear?
Yes, sir. Yes, sir.
All right, let's move on.
So what if the NCI is measured at fair value?
Okay, good. If NCI was measured at fair value, you see, that time we calculated the goodwill. We would have made a division, we would have made an allocation of the goodwill that belongs to the parents and the goodwill that belongs to NCI. Do you understand? Meaning that out of that 18,000, there will be a portion that belongs to NCI, there will be another portion that belongs to parents. So which one is lost? The one that is lost is the one that belongs to the parents. So not all the 18,000 will come here. Is it clear? So when I want to calculate the value of NCI, I'm not doing 20% of anything. I am just saying, what is the value of the shares of the subsidiary? If, for instance, I was told it is 5 naira, I will multiply 5 naira by the number of shares of NCI. And that will be the value of NCI that I'm going to remove. Is it clear?
Yes, please.
Is it clear?
Yes, yes.
Good. 20% of 258,750. My calculator said 51,750. If I take that away, what do you have? I expect you to be pressing your calculator as well. 258,750 plus 18,000 minus
225,000.
225,000. Good. 225,000. My answer is 70,000. Do you see? Is it clear now that when control is lost, I am going to say fair value received, fair value of consideration received, plus fair value of equity retained versus what is the net asset I have lost. And to calculate the net asset I have lost, do everything all together. The net asset plus the net asset of the subsidiary plus, of course, as at the day of disposal, very, very, very important. The net asset of the subsidiary as at the date of disposal plus the goodwill that belongs to the parents minus the NCI. All right? When I do that, what I get will now be my gain or loss on disposal. As simple as that. Now let's come to the group or the consolidated retained earnings. All right. Resco, Masco. Abi? So as per the account, as at 30th 9 2017, Naira. We're told Resco had 207,000 Naira as retained earnings. Abi? And then we were told that Masco had 180,000 Naira as retained earnings. But pre-acquisition, the question told us that retained earnings in Masco was 90,000. All right. Now, also post disposal, if there's anything like that, we calculated it the other time. It was that 11,250. Now, why am I removing post disposal? There are two profits that Resco will not get part of. It will not get part of the profit before it's bought Masco. Abi? That's pre-acquisition retained earnings. It will also not get more than associate profit. All right? After the day it disposed 50%. I don't know if you understand what I'm saying. It will not get group share, will not go beyond the date they lost control. They lost control the day they disposed 50%. So I have to be careful. So in terms of group share of profit, we have to take out that 11,250. So what do we have left? If you recall, the other time we had 78,750. You press the calculator, this is what you will get. All right. Now, their group share or parent share now, what they will get as a parent inside the 78,750 is 80%. Let's do 80% of 78,750. You get 63,000 Naira. Don't forget they had a gain on disposal. Gain on disposal. We got it here how much? 70,000. All right. Now, since we are going to account for, this is what they have as at the date of disposal. This is what they are getting. They are getting 63,000 of the retained earnings of Masco as at the date of disposal. Now, beyond the date of disposal, they now became an associate investor, meaning that they are going to get out of this post-disposal profit, 11,250, they are going to now get only 30%. Out of 80, they sold 50. They are going to get 30% of associate profit. So, associate profit, share of associate profit will be 30% of 11,250. When you calculate that, 30% of 11,250, you get 3,375. If I add these together, what do I get? 3,370 plus 70,000 plus 63,000 plus 207,000. 343,375. That's what I get. So is this clear? Is this clear before I move forward? Is this clear? Is this clear to us? We are not speaking. I will assume that it is clear. I'm going to assume that it is clear. Can I move on? Should I move on? It is clear. Okay, all right. No issue. I'm just going to move on. Now, don't forget that it is now an associate investment. All right. Since it's an associate investment, equity accounting means I'm going to ask myself, what is the value of our investment in RESCO? What is the value of our investment in RESCO? Somebody wants to answer that. What is the value of our investment in RESCO? If they ask you, what is the value of investment, I say in RESCO, in MASCO, what is RESCO's value of investment in MASCO? What's your answer? Are we here? Are my students still in class? Ting. What's happening? Are you still in class?
Yes, sir.
So if you were asked that what is the value of the investment of RESCO in MASCO, what would be your answer?
162,000.
162,000. Okay, you are correct. As at 30th September 2017, when we had not considered all of this information, according to what the question gave you, yeah, but you would be wrong because you have not done equity accounting yet. Yeah, let's do it together. Let's do it together. Now, the question told us specifically that the equity that was retained, that 30% that was retained, they told us the fair value is 125,000. All right? We're told it is 125,000. So I will say investment. Absolutely sorry, guys. Somebody was knocking on my door. So I had to check. All right. Investment in RESCO. Now, fair value retained, they told us is 125,000. All right. Now, share of profits in associates. Profit that we are sharing in associates now is this 3,375. And this will amount to 128,375. So when I said, what is the value of our investment in RESCO? 162,000 they told you then is the historic amount that we paid for 80% of their shares in 2015. As of today, when we have disposed 25% of that, and when we have now had a share of their 3 months profit, what all of that culminates to in equity accounting is 128,375. All right. Okay. Now, quickly, I can then go ahead and consolidate these results. Okay. I'm going to erase everything at once. We are almost there. The class will soon be over. Don't worry. Just pay attention and stay with me. Number one thing I have said, rule of consolidation. If I am to consolidate, I will add up the assets and liabilities of the parent and the subsidiary. But now I do not have the responsibility to consolidate. The only thing is that I am going to show my investment in associates in my books. Okay, what I will do is this. I will say PPE, it will be only that of Resco. The PPE of Resco is 180,000 naira. Investment, I say Resco of Resco, sorry. Investment in Masco. We have calculated it. We got 128,375. All right. Now, current assets. Don't forget that we received money. 185,000 plus. How much did you collect? How much did you collect? You collected 170,000 plus the 170,000 we collected, making a total amount of 355,000. If we calculate this together, 180,000 plus 128,750, 375 plus 355,000. We get 663,375. Okay. And when we come to equity, ordinary share capital for Resco is 270,000. We had calculated the retained earnings, and the retained earnings we calculated was 343,375, making a total of 613,375. And their current liabilities, 50,000. If I add this together, I get 663,375. This is the SOFP. And I come to do SOPL here. You have to be careful here. I am only going to, we are not looking at it from the same way we looked at SOFP. As at the date of consolidation in my SOFP, the only thing that will enter that belongs from what I am getting from Masco will be two things. When I'm writing down my investment in Masco, it would have included my share of associate profit, number one. Number two, my retained earnings would have included the profits, the post-acquisition profits that I got until the day of disposal. And then again, the share of associate profits. That's all. But when I come to my SOPL, I will share in the profit for 9 months. All right? It will be 76,500 plus 9 months out of 12 months, multiplied by 63,000 naira. All right? 9 over 12 times 63. That's 0.75 times 63,000 naira. Give me 47,250. Add to that 76,500. And you have 123,750. All right? Now, don't forget that we had a profit on disposal. Profit on disposal of how much? We had a profit of disposal of 70,000. If you recall, it was 70,000. And then associate profit share of associate profits, of course, post disposal, it was 3,375 naira. All right. And then there was income tax. Now, income tax as well, I am only going to consolidate 9 months. I mean, 22,500 plus 9/12 times 18,000 naira. And that should give me 9/12 times 18.75 times 18, 13.5 plus 22.5. That gives me 36,000. So I'll remove 36,000. Now, if I do this, 3,375 plus 123,750, all right, plus 70,000, then minus 36,000. That gives me 161,125. All right. Now, what is attributable to owners of parent and what is attributable to NCI? Okay. We are not necessarily dealing with NCI per se, but we need to take out what NCI must have gotten out of the 45,000 for 9 months. NCI would have gotten this much. Happy? Don't forget that as an associate, the 30%, you have already accounted for it. The 30% of 11,250 for those 3 months, you already accounted for it here. All right? You have taken that already. NCI can go and sort itself. So for those 9 months, NCI will get 20%. The remaining 3 months, you are no longer part of the group. You don't care about that. The only thing you should care about is whilst you were still in the group. What belongs to NCI is 9/12 times 45,000, 20% of that. And that should be how much? 0.2 times 45,000 times 9/12. That gives us 6,750. Now they are supposed to share this amount, okay? So therefore, parents will get 161.125 minus 6.75. What do we have left there? Minus 161,125, 154,375. Okay? And that is all for this question. Is it clear to us?